Hey traders, checking in on the stock market today. Tech sector pulled back, but we continued to see rotation going on with money flowing elsewhere. We'll check in on where that was happening. We also saw our MJ sector bulls start the morning strong, but give a lot of that move back as the growth sector names have really been struggling back and forth the last 4 days, lacking short-term clarity. We'll see if the charts can give us some of that clarity. And we're also going to look at a couple key bounces that I'm watching in the next couple of days on some major names. So we'll start off with SPY, slow grind higher, and again, just flat. Look at the last 3 days. The range of these candlesticks are the smallest ranges that we've seen over the last bunch of weeks. And if we're holding up and seeing tiny ranges, that just tells me there's money swirling around and moving around to different places. And we look at the NASDAQ futures chart. We had this 12-hour rising wedge that we were watching from last week. It did finally break bear, but right now there's a little double bottom down here, and we're lacking follow-through for the bears at the moment. So tomorrow will be key as to whether or not we get follow-through. QQQ 362 is the most important level for me. Essentially today was an attempt at the all-time high, a rejection by less than 40 cents, and then a sharp drop down. That bounce was a nice bounce, and I played it. We'll go over that at the end of the video. But again, it's just a drop in QQQ, and the financial sector is where we saw the money and the names that are correlated with the financial sector, and that's what a lot of people call the value names. We saw the airliners seeing a bounce with the financial sector, and generally it's the airliners, the cruise liners, the hotels, they're all correlated to each other, and there was a lot of green out there in those names today. At no point was there broader market fear. Again, the only time that I'm going to call something broader market fear is when all sectors are dropping together, and that shows us money leaving the market. Because if one of our major sectors is at the high of the day, and the XLF and QQQ inverse correlation that we've been seeing is just masterfully executed. It is just, and there's clues to be had there. Let's go into the trade review right now. QQQ, 5-minute oversold bounce. I was looking at this bounce this morning, and we had a break of the low of the day with the lack of follow through. At that point in time, I was on the 1-minute time frame and just watching this drop. So I know the bigger picture. Okay, we got 15-minute RSI in the teens. We got 5-minute RSI really beat up. We got hourly RSI just hitting oversold. I'm scouting a bounce. So the bigger picture had me zoomed in on the 1-minute time frame, and it was just a drop here. And the bear break started lacking follow through, so I was watching the falling wedge. And I've been loving playing falling wedges recently. And I made my entry. I posted in the chat room at 11:16 that I made my entry, and I'm just going to bottom fish because I used a very large position. When I trade QQQ or XLF, I use larger capital because as a sector, I could choose to use the leveraged ETFs that have more volatility and use smaller capital. But there are times where I just use the capital at my disposal. And as soon as this bounce started, just a very small bounce, I said, I'm either going to nail it or I'm going to want to be back to cash. And I just placed my stop at 365.49. And then we got the bounce follow through. I exited half of my position on the initial 1-minute trend change, and it was just a sell at the 2-minute EMA 12 because we had been rejecting from the 2-minute EMA 12 the whole drop, and so I exited half right there, and that then put me in complete control of the trade. Can't lose, stop under the low, and then I just walked my stop up with a 1-minute uptrend as my guide, and every time we set a 1-minute high or low, I moved my stop up. And so my most recent stop was right here. I put my stop under 366.79, stopped out there. We did see a little bit more follow through to the upside, but that was it for me. And that was a very solid win. And it wasn't a huge bounce by any means, but the reason it was a solid win was because, again, position sizing. So a 1% move on QQQ is very significant. A 1% move on a stock like NIO is not significant. So the position size that I was in on QQQ was something like over 10 times of what I would be on NIO. Probably right around 10 times. So again, the volatility dictates how much capital I'm putting into play because I don't want to be using large positions on more volatile names. Not all stocks are created equal, and your position sizes should reflect the amount of volatility the individual name sees. You should not be trading the same position size on something like NIO or Hood or AMC that you are on something like Apple or Tesla or things that are a little bit more contained. So what the point was through all that was a nice bounce, but there were clues in XLF. The inverse relationship between XLF and QQQ has been so strong that we were trying to bounce on QQQ here, and we could see QQQ looked like it was ready for a 5-minute oversold bounce and just kept dropping, and that started at 1040, and then we just struggled. And look at what XLF was doing at 1040. It was breaking to higher highs, and that kept me patient. If I was not watching XLF, I would have entered QQQ earlier, and I would have had a worse average, and I would have entered on this initial drop. But XLF staying up at the highs and not consolidating is why I remained patient. 1125 marked the high of the day, and we consolidated from there. 1115 marked the low on QQQ. And then once that bounce started, and once I saw XLF pulling back, I started to get a bit more confident that that bottom was going to hold. But again, it is just so skillfully inverse to each other the last however many months, I can't even remember, and that just ensures the broader market is staying strong. If QQQ drops, XLF is up. If XLF drops, QQQ is up. And that is why SPY is remaining so very strong. When that rotation game stops and money leaves the market and XLF and QQQ and XLV are dropping at the same time, it'll be very notable. So again, I talked about in the video yesterday that the next time I see that signal, I will be acting aggressively on it. I will be using stop losses as always, but that will be a big flashing red light for me to establish bearish positions and go aggressive. And we'll see how it works out. It hasn't happened in a very long time, probably a few months at this point. So QQQ, we're watching the daily uptrend, definitely a short-term drop, and overnight tonight we can be watching the NASDAQ hourly equilibrium on the futures here trying to form. Bulls are attempting an hourly high or low, so anticipating an hourly equilibrium is more likely to form than not over the next bunch of hours, and we'll see how does that hourly tightening range break. IWM, still scouting a weekly lower high. Anything under 233.64, a weekly lower high is the most likely scenario. The daily bull breaks are lacking follow-through at this point, but we have to lose the daily high or lows if our weekly lower high is going to be set. So again, financial sector has just been all breakout mode ever since these bulls cleared the low 37s. We had a lot of tops in the low 37s, and that just opens the range up. As soon as you get over that level, the most bullish 3 days in a row we've seen in a while here, once we clear that resistance. All-time highs back on the table. Monthly bull flag trying to confirm 38.60. We came less than 0.5% away from that level today. Healthcare, still sideways, still holding on just fine. If we lose 132 support, then weekly consolidation will be underway, and we'll scout a weekly high or low. And the first thing I'm going to be watching for if that happens is, okay, where's the money going? If XLV is consolidating, is QQQ now hitting all-time highs? Is XLF now hitting all-time highs? Whose turn is it? Because that's the way the market has been going pretty much since the COVID dump lows. Just, again, it's so skillfully rotating around to keep everything strong. Growth names have been very tricky the last 4 days. So, again, when I'm watching the broader market, I'm watching the rotation between those three major sectors for the most part. But within QQQ, I have to watch the rotation between big tech and growth. Those are two components of QQQ, and QQQ is one of the three major components as far as the sectors that I watch for the broader market. So with growth names, they've just been going ping-ponging back and forth the last 4 days. Thursday, big bull day. Friday, big bear day. Monday, bull day. Tuesday, bear day. It's just gone green, red, green, red. And you just look at ARC, same thing. Green, red. Bears win in the short term. XBI, bears won in the short term. TAN, not as significant of a bear drop, but bears won today. And so with that, I talked in the video yesterday about establishing swing positions. And I established a swing position in PEN, looking for a monthly bounce to take place. Today was a red flag on PEN because we started the morning strong. We broke the high of yesterday, and then we hit a new low of the day. As soon as that happens, as soon as you start the morning strong, break a resistance level, and drop to a new low of the day, big red flag. And we tried to recover. We rejected from the high of the day, and then bears controlled the rest of the day from there. So I wasn't planning on putting my stop loss under 69.65, But I will go back to all cash if that level breaks, because for me, that is an attempt at a bull flag and a failure. And today was a bull attempt that just got smacked down. And if you look at the last 2 days, XBI just as an example, they've been completely opposite days. So look at yesterday. And again, this is just me talking about the back and forth and how it's been very difficult. 10-minute drop, and then the bulls control the rest of the morning. This morning, we had, in most growth names, 10 minutes of upside, not a whole lot, just a few minutes of upside in XBI. And then the bears controlled the morning. Let's see if ARC is a bit more clear. Bear drop, all bulls. Start strong, all bears. Breaking resistance. We broke resistance straight into a big drop. And another example, one more. Nah, Tesla didn't do it. So, bottom line is, growth has been extremely difficult to trade the last 4 days. And growth is the one space that I'm comfortable looking for bullish positions in if the broader market's going to stay strong. So I entered the MJ space. And MJ names, I was looking at ACB's tightening daily range. And we broke high of yesterday, but did not break the triple top at 755. So still going to give the bulls a chance there. We had CGC break the daily inside bars bullish. I was looking at either entering TLRY or CGC. I entered the bull break of 1920 and gave a lot of that move back with growth pulling back today, but still maintaining an hourly uptrend. And keeping an eye on CGC for a monthly bounce to try and shape up now that we've been pulling back for 6 months. And we had our earnings report. That's out of the way. So can these bulls shift the momentum? I need a break of 2010 and 2046 to say, yep, I was right. And if those levels don't break, then I am not right on this trade. And at this point, the hourly uptrend is going to be my guide. And if we don't break those daily levels and we lose the hourly uptrend, I'll go back to all cash. I won't give up on the trade, but I will keep my losses tight because I am playing against momentum. And I'm looking for the momentum shift. But if the bulls don't prove it to me, I'm not going to be stubborn and just average down into weakness. Just going to try and time the momentum shift. So still in CGC, still in ACB, still in Penn, but at risk of exiting Penn here tomorrow if the bears follow through it all. So other than that, we've got XBI on the daily, multiple inside bars, broke bear. So the biotech sector is still weak. We confirmed a daily trend change with 0 follow through. Anything above 122.40 is a daily high or low. But we have to hold 122.40 and break 129.66 if the bulls are going to keep this daily uptrend going, and the burden of proof is on them to do so. So just no confidence in growth for me personally, unless bulls prove it, and they haven't proven it the last 4 days. Semiconductors, pretty solid drop today, no longer a bull flag. Hourly RSI oversold on the morning dip. Solid bounce from first hourly oversold conditions, but we have to see an hourly trend change back to the bulls for a daily bounce to get going. And AMD is trying to set a daily high or low off of EMA 12, but the bulls have to confirm the hourly trend change. Drop today, solid bounce, hourly trend change needed. If we break the high of today tomorrow, 109.17, daily high or low is set, and we then scout a daily lower high compared to 122.49 due to the size of this retracement. And aggressive bears are going to be scouting that lower high top fish bearish entry. And the aggressive bears will be hoping that it results in a confirmed daily downtrend into weekly consolidation. And of course, the broader market and QQQ are both going to have a factor as to whether that plays out or not. But short term, we're scouting the daily bounce. Midterm just being a few days, we're scouting a daily lower high to be the result of the next daily bounce. Solar sector, daily high or low set at 85.21. It would be a red flag for bulls if we fail $90 resistance and drop down to break that support level of 85.21, because that would confirm a daily downtrend and that would confirm a weekly lower high shaping up. And this is a lot of growth names have this tightening weekly range here, and we're scouting weekly lower highs. And the last thing that growth names want to see is broader market weakness or any kind of fear, because if we confirm a weekly downtrend, our monthly bounce is already used up and that monthly lower high will be set. And it can be a monthly bear flag. So the broader market has to stay healthy to give these growth names a chance, which is why I'm watching the broader market extremely closely every day to see where is money flowing. So MSOS, we've got earnings this week for the USMJ space. I'm not as interested in USMJ as I am in Canadian MJ because Canadian MJ is higher listed and they've got volume and liquidity, and the USMJ names do not, but still holding up. Pretty flat day out there, a little bit of red, but I'm just scouting for a weekly lower high to be set on MSOS, but I'm paying very close attention to the MJ sector because historically, heading into the fall and into the voting season, that's when we see momentum from summer weakness shift into bounces. So we see articles pick up, we see headlines and media coverage, we see talks about votes, and then in November we have this state doing medical, this state doing recreational, and it's just a whole lot of attention and focus on the space. So keeping an eye out for that shift, but again, it's the same thing where the bulls have a lot of proving to do and not giving them any benefit of the doubt, positioning myself for that potential momentum shift, but also not just blindly hoping and holding that the momentum shift happens, have to see it proven. So anything under 41.39 is a weekly lower high, and a weekly trend change for the first time since all-time highs would be very notable the next time that takes place. The VIX dropping down still, not much going on the past few days, and still looking down at the base of support around 16, just under 16. Next time we bounce on the daily, anything under 2044 is just a lower high. Let's talk about stocks. So the stock bounces that I'm looking for over the next 3 days. Back burner trades. Again, Google back burner chart, guys, if you don't know what that is. There's a video explaining it. They are high probability trade setups. And I'm watching mRNA, which is just looking a little bit toppy. We broke the all-time high today, but no follow through. And then we confirmed an hourly downtrend into the close, and we're a bit weaker after hours. So I'm watching for a daily higher low, anything above 393.61. I'm watching daily EMA 12 support, but what I care about most on the bounce play is hourly RSI. I want that hourly RSI to hit oversold, and then I scale in looking for the bounce. And again, it's high probability. It doesn't work every time, but certainly more often than not. And I love bounce plays, so knowing that something's been running really hard to all-time highs, is starting daily consolidation, and is looking for an hourly oversold bounce, that absolutely gets my attention. So if we gap down open tomorrow, if we drop down under 440, hourly RSI will be on watch, and the more RSI levels that are overextended, the better. So I want the 15-minute RSI down at 20. I want the 5-minute RSI in the teens. I want the hourly RSI breaking 30. That's when I have confidence starting to scale in for that bounce. The other trade I'm looking at is Hood. So we know Hood had a bunch of attention with its massive run to that high, and now we're scouting a daily high or low. There's a support level at 50.46. I'm not calling that our daily high or low because we never changed the hourly trend bullish, and we're just setting a lower high every single day still. Look at the volume drop off. So I'm watching for hourly oversold conditions for the first time since all-time highs. If we break 53.50 tomorrow, hourly RSI will be approaching oversold right at $50. And there's going to be two plays there, either a bounce off of 50 or a break of 50 for a gap fill at 48.59. I'll be watching for both of those possible scenarios to play out. But again, my style of playing these bounces is scaling in because I know I'm not going to nail the bottom, and my risk is either based off a stop level or predefined dollar amount I'm willing to risk on the trade. But both Hood and mRNA are setting up for hourly back burner trades later this week. And I can just write it down next to my computer. I don't know when that trade is going to present itself, but I know that that is a trade that I will likely take once it does. Dollar. Key resistance test of 93.19, trying to confirm the weekly cup and handle. And we're stalling out just under that resistance level, but still very strong. We would need to lose the 4-hour EMA 12 if we're going to look at any daily consolidation. And then there would be the potential. Remember natural gas? Natural gas had a weekly cup and handle and a daily cup and handle within each other. The weekly handle was a daily cup and handle. And so we're watching for the same thing on the dollar, essentially. If we reject from 93.19, do we then form a daily cup and handle within the weekly cup and handle. And it's entirely possible that shapes up. But first things first, we would have to reject from 93.19 and head back down towards 90 or to under 93 with a more convincing pullback here. But it's worth watching, especially with the metals. The metal bears are keeping their control. 4-hour lower high, each bounce attempt. So anything under 1738 is just a lower high on the 4-hour chart. Daily inside bar forming, inside bar bear break, and we scout a play off the low. And if we have an inside bar bull break, then we just scout a daily lower high. And silver's the same thing. Clear 4-hour lower high resistance at 2368. If the daily inside bar breaks bear, we scout a bounce play off of the low. And if it breaks bull, we know a daily lower high is the most likely result of that bounce. The miners are due for a short-term bounce. They've been dropping real hard 4 days in a row, but not oversold on the daily yet. And at this point, the next support is 3165. If we were to gap down open tomorrow, I'd be interested in a bounce play, but otherwise just an hourly downtrend and hourly EMA 12 resistance as a guide, keeping the price contained. Oil with bounce follow through, creating the space for the bulls to try and change the 4-hour trend. If we do, it's already pretty convincing. The double bottom off 65 with a 5% plus bounce. And the weekly shaping up a higher low. Anything under 74.23 would just be a lower high, but we've now got a 6-week tightening range on oil. And if the 4-hour trend change confirms, we'll be looking to get right back in the midway point of that range. 50% retracement from here would be roughly, in the 69s. So we're almost there as far as getting back to the midway point. Natural gas, daily higher low trying to form off of EMA 12 yet again. Inside bar today, but this is where aggressive bears scout a top fish. So size of the pullback big enough for an aggressive bear to try and short and put a stop over 422. Probabilities of getting stopped out are high. This is the way trading works, where if you have a setup that is trading counter momentum and playing off a key resistance in this instance, or if a downtrend off a key support, your risk is small, your reward is large if that level holds, but the probability of stopping out is high. So that's how it balances out. And in this instance, your probability of stopping out from a short top fish would be fairly high, the risk would be real small, and the reward would be significant. And just to exemplify that, let's say I just short right now at 412. And my stop is 422. I'm risking 10 cents if I'm correct and we confirm a 12-hour downtrend. Before we even break resistance, my risk is already as much as my reward right when we break resistance. And then any follow through into weekly consolidation, my reward is then multiple times more than what my risk is. But again, it's because you're playing against the trend that risk and reward is so favorable. So the probability of stopping out is high. But this is the kind of scenario that I often like, because let's say reward versus risk is 3-to-1. If I stop out 2 times and I get the successful trade once, I still make money and it's worthwhile. So that's the way the relationship between risk, reward, and probability of stopping out all play off of each other. So in summary, growth extremely difficult the last 4 days. MJ sector, Canadian MJ specifically, great start to the morning. Gave a lot of it back. A little bit of uncertainty there. Need the bulls to show up and prove it on the daily time frames. And they need the growth sector to help. The Canadian MJ bulls are strongest when all growth names are going up. And today was an instance where they held up better than other growth names, which has not happened in a very long time. But again, a lot of proving is needed. We're watching Hood and mRNA for first hourly oversold conditions. Make sure you watch that video because I detail the trade setup for backburners a lot more in depth, and there are instances where it is an ideal scenario and when it is not an ideal scenario. So if mRNA drops bearish news, it's no longer the same kind of setup. So have to be keeping an eye on all the little factors at play. Other than that, we'll see if the tech sector bears can get any follow through. The rotation game is still strong, keeping SPY strong. And that is where we stand in the broader market. Hope you have a good rest of your day. We'll see you tomorrow. Don't forget to do good things. Corn planted by the squirrels over the summer is going to give them more corn. And I also smashed a pumpkin last year across or against that tree. And a squirrel picked up a seed and planted it in this bed. And now I've got about 6 pumpkins that will smash this year and do it all over again. Tomatoes held against the blight well. This is the blight. So it is getting it slowly, but slow enough that the fruit can still mature. I'm gonna have way more than I can eat. I've gotta make some sauce and some soup. Harvested the delicata squash. Letting these other squash go a little bit longer. These were little dinky basil plants that were struggling. I put them out a little bit too early. And they had some frost damage, or some cold damage, but they certainly took off. Harvested the garlic out of this bed and planted crimson clover, which will add nitrogen back into the soil and is a nice little fall pollinator. We got onions, so starting to free up beds, and in August here in North Carolina we can do second rounds of things. So I can do a whole another round of carrots and beets and brassicas and lettuce and peas. So it's pretty much round 2 for the season is starting to get going once we clear out everything that's dying off from round 1. These are all volunteer squash covering the compost pile that I did not plant. And with squash they cross-pollinate. So they oftentimes give you stuff that's not edible or at least not good. So I'm trying to find some of these giant squash in here to show you, but I'll just smash them open and give them to the squirrels and all the other animals. You can see there's a big one in there. Looks like a cross between a delicata and a, I don't know what.